Hey guys, this is Jen. Welcome back to my channel, Trade with Jen. On today's topic, we're going to be speaking on terminology. I believe that is a foundational, pivotal moment where every trader should at least start learning, especially in the beginning, right? Because coming into this industry, you're going to hear a lot of words that are going to sound like, how do you say this? Obviously out of the norm, right? So there's going to be questions in the beginning of what this means, what that means, and a lot of it really just comes down to terminology. So yeah, so let's get to it. All right, so here are the basics of what I believe everybody should know just to kind of start off with in order to start adapting and getting to the whole trading learning curve. Okay, starting off with the trading tools and management. First word is going to be leverage. What is leverage, guys? It is the use of borrowed funds from a broker to control a larger trading position with a small capital amount. It magnifies both potential profits and losses. What does that mean? That means that you can have a really small account, right? And if a broker has a 1 to 50, 1 to 100, 1 to 500, even a 1 to 1,000 leverage, all it's saying is that whatever a money amount you have in there is going to be times whatever that leverage is. Basically giving you a little bit more leeway and having your funds be a little bit more flexible to touch, more profits. And then, God forbid, if you're on the wrong side, then definitely is going to be losses. Next one up is going to be the stop loss order. Stop loss order, it's a risk management tool that automatically closes a trade for you if the price moves against you, okay, and it reaches a specific predetermined level, limiting your potential loss. Again, in more simpler terms, all it is if a trade's going against you and you have a stop loss, it's going to cut it while it's still small. Okay, moving forward, we see a take profit order. What is a take profit order? It's an order that automatically closes your position once the price reaches a specific profit target. Okay, so let's say that you want to put in a trade. Okay, as you put in a trade, one, you should practice putting stop loss, obviously, right? And secondly, you're going to have a take profit. Now, a lot of us, they do kind of like a risk to reward ratio, but we'll get into it a little bit later on. I want to start off with just the basics of terminologies and then get in a little bit more depth on a different video. Um, but yeah, so take profit order, all it is you placing a particular number of what you're speculating the market is going to do. So for instance, if you're going into a buy trade, right, and you're like trading gold at 4,000, right? And you are targeting 4,100. Your take profit is going to be 4,100. So when gold reaches that particular number, it's going to automatically close it for you without you having to manually close it. Okay. Next, going over long position and short position. Okay, what is a long and what is a short? In the normal world, long means it's a buy position and short means it's a selling position. Okay. Long is a trade where you buy a currency pair with expectation that the price will rise. Okay. Betting on an upward trend at that moment. And vice versa, in a short position, selling position, right? It's a trade where you sell a currency with expectation that the prices will fall, basically betting on a downward trend. Market analysis form terminologies. Everybody should know what a bull market and bear market is, first and foremost. That is the basics of the basics, guys. This is why I'm going over this. Bull market, also known as a bullish market, also known as an uptrend, upward channel, whatever you want to call it, it's going up. Okay. It's a market condition where prices are rising and traders expect an upward trend to continue. Okay, next we have a bear market, also known as a bearish market. It's a market condition where prices are falling and traders expect for a downward trend continue. Okay, Volatility. What is volatility? Right over here, guys. It measures how quickly and significantly the prices of a currency pair is moving. High volatility indicates larger price swings and potential higher risk. All it's saying is that certain particular pairs is going to have volume. They're going to move really fast, especially during fundamentals. In other words, news. When there's a particular news and we have these red folders where they're very high impact, that particular pair is going to have volatility. Okay, liquidity. What is liquidity, guys? It refers to how easily a currency pair can be bought and sold without causing a significant price change. Major currency pairs generally have high liquidity. What are some major pairs with high liquidity? Okay, gold. Gold has a lot of liquidity. Okay, it's heavily traded. Another pair is going to be GJ, like the currency pair, Forex currency, right? It likes to trend. There's a lot of liquidity in it. Perhaps you might be trading NAS 100, also known as NASDAQ, right? Top 100 companies. US 30, okay, also known as Dow Jones, your top 30 companies. Those are very highly traded pairs. So yes, they're going to have a lot of liquidity in them. Next, we're going to go over fundamental analysis, okay? It's analyzing economic, social, and political factors, such as interest rates, GDPs, inflation reports, to predict long-term currency movement. This is news, guys. There's definitely websites out there that speaks on particular news, especially if you're trading certain pairs. Pay attention to those fundamentals based on the pairs that you are trading. Technical analysis is analyzing historical price data, chart patterns, and technical indicators. Okay, such as the RSI, perhaps you're using a moving average, or the stochastic. All of these are technical indicators that make up a technical analysis from it. Okay, BOS. Okay, mainly known as break a structure, which usually happens as the market is trending, right? As the market is trending bullish, more so, it's making new higher highs. So every time it makes a new higher high, it's breaking a previous structure from that last high. Okay. And vice versa. If the market was trending down, it would be breaking lower lows, creating a new lower low as the market is going bearish. Okay. CHOC, chalk. Okay. Also known as the change of character. In other words, short term, known as chalk. Okay. Meaning it usually happens when there's a shift on a trend going on to another trend. Basically, if the market is bullish and all of a sudden we're seeing candles come in, lower than a higher low from that uptrend, that is a shift in trend. Okay, also known as change of character. When you see the abbreviation HTF, it means a higher time frame. Higher time frames, meaning such as, daily, weekly, monthly, and so forth. And then we have LTF, which are lower time frames, such as 30 minutes, 15-minute time frames, 5 minutes, 1 minute, and seconds. Okay. And then last but not least, everybody has to know a top-down analysis. What is a top-down analysis, guys? It's following your trading plan to the T. Okay, making sure that you're checking everything off as far as, okay, technical analysis has been properly assessed, fundamentals has been properly assessed, price action, all of these things have to be within a trading plan, right? And a trading plan, there's not a particular trading plan because to each in their own, everybody's a little different. So everybody's gonna have different things. Speaking to them, making things a lot more effortless to break down. Okay, but yeah, that is it for the basic terminology, guys. If you guys liked what I just showed right over here, and obviously getting more into other things and more advanced along the way, don't forget to click like, and subscribe for more videos, guys. Thank you.